Welcome back to Explain the Charts, your essential guide for navigating the complexities of global financial markets. Today, July 21st, 2025, our focus is squarely on the USDCAD currency pair, which is currently experiencing a fascinating tug-of-war between fundamental and technical forces. Starting with a broad overview on the daily chart, examining all available historical data, we immediately notice periods of significant price swings, characteristic of a pair influenced by major central bank policies and commodity prices. While some extreme low wicks are present, which could represent flash crashes or data quirks, the overall picture from late 2024 into early 2025 depicted a strong bullish rally, pushing the pair to multi-month highs. This upward momentum was driven primarily by a strengthening US dollar narrative, likely reflecting the robust performance of the U.S. economy. However, since peaking in early 2025, USDCAD has reversed course, establishing a clear descending trend channel on this daily time frame, consistently printing lower highs and lower lows. This medium-term bearish trend highlights a shift in market sentiment, perhaps indicating growing confidence in the Canadian economy or profit-taking by early bulls. Intriguingly, recent news reports introduce a layer of complexity to this technical picture. We hear that strong economic data out of the United States is causing market participants to dial back their expectations for Federal Reserve rate cuts, a factor that traditionally strengthens the US dollar and should push USDCAD higher. Conversely, the Canadian dollar is demonstrating unexpected resilience, largely due to firm expectations that the Bank of Canada will hold its interest rates steady at their upcoming meeting on July 30th. This creates a scenario where a fundamentally bullish catalyst for the USD is being somewhat neutralized by the anticipated stability from the BoC, resulting in the current period of consolidation and indecision. Understanding this dynamic is key to predicting USDCAD's next major move, which we will now explore in more detail. Let's zoom in specifically on the daily chart's performance from February 2025 to the end of our data on July 20th to thoroughly analyze the evolving trend. As mentioned, after its early February peak around 1.479, USDCAD has been in a sustained downtrend, defined by a clear channel that has guided price action for months. Within this channel, we can pinpoint strong resistance levels, particularly around the 1.43 to 1.44 zone. Each time the price has attempted to rally into this area, it has been met with significant selling pressure, forming clear upper boundaries for this downtrend. This suggests that a substantial number of sellers are positioned at or above these levels, prepared to defend them aggressively. On the downside, a critical area of support has formed around the 1.36 to 1.365 range. This zone has consistently acted as a floor, preventing further declines and signaling that buyers are stepping in at these lower valuations. The current price of USDCAD, trading around 1.372, places it just above this long-term support, making this a pivotal moment for the pair. From a bearish perspective, a decisive close below 1.36 on the daily chart would be a powerful signal, likely accelerating the downtrend towards 1.35 and potentially even challenging the 1.34 handle from previous lows. Conversely, for a bullish reversal to take hold, we would need to see a strong breakout and sustained close above 1.38. Such a move would invalidate the current bearish channel and could open the door for a retest of the 1.40 level and potentially higher, towards the 1.42 resistance if bullish momentum can be maintained. The interplay of these key daily levels is crucial for understanding the pair's medium-term direction. While the 1-hour chart data available to us is from late June into early July, it provides valuable insights into short-term dynamics during that period and how intraday movements can unfold. Observing this snapshot, we can see that USDCAD exhibited a general downward drift, moving from highs near 1.368 down towards 1.358 over these few days. This shows a clear bearish bias within this specific short-term window, characterized by consistent lower highs and lower lows on an hourly basis. The price often found temporary support around the 1.362 level before breaking lower and faced resistance around 1.365 on rallies. Volume remained relatively consistent during this period, without any major spikes that would indicate a sudden shift in market structure. This kind of gradual, trending movement on an hourly chart can offer scalpers and day traders opportunities to follow the prevailing trend. It emphasizes the importance of identifying minor support and resistance zones within larger trends for tactical entry and exit points. Turning our attention to the 15-minute chart, this time frame provides the most immediate and granular picture of the price action leading right up to the current day, July 21st. From July 15th through July 20th, USDCAD has been trading in a very constrained range, oscillating primarily between 1.371 and 1.373. This tight consolidation is a direct reflection of the market's current indecision, and it perfectly aligns with the news reports indicating the pair's slight downward movement and current trading around 1.3725. Notice the relatively low transaction volumes during many of these 15-minute candles, which is a common characteristic of markets awaiting major fundamental announcements or with no clear directional bias. The current equilibrium seems to stem from the countervailing forces we discussed, the general bullishness for the USD from receding Fed rate cut expectations, clashing with the unexpected strength of the CAD, anchored by the anticipated unchanged Bank of Canada rates. This tight coiling action on the 15-minute chart strongly suggests that a significant price move is brewing, awaiting a catalyst to push it out of this narrow channel. Traders should be on high alert for increased volume accompanying any breakout from this current pattern, as this would lend credibility to the new directional momentum. Let's pinpoint a specific recent intraday period on the 15-minute chart, focusing on July 17th, to illustrate how short-term support and resistance play out in real time. During this segment, we can clearly observe that every attempt by the price to climb higher, specifically towards the 1.375 and 1.377 marks, was decisively rejected. These consistent rejections, characterized by candles closing well off their highs, indicate strong selling pressure at these intraday resistance levels. Conversely, dips towards the 1.3715 to 1.372 area consistently found buying interest, forming a resilient short-term support zone. This back-and-forth price action, bouncing between these levels, paints a picture of a market in accumulation or distribution, with no single side currently dominating. For agile day traders and scalpers, these defined short-term boundaries offer clear entry and exit points, buying on approaches to support and selling on approaches to resistance. However, given the narrowness of this range, the risk of fake-outs, false breakouts that quickly reverse, is high, emphasizing the need for robust risk management and confirmation of price action. Monitoring for increasing volume alongside price breaking these immediate levels is crucial for validating a true breakout from this tight consolidation. To synthesize our findings and provide a forward-looking perspective on USDCAD. In the immediate short term, the pair is displaying remarkable consolidation around the 1.372 level, reflecting a standoff between bullish USD fundamentals and a surprisingly resilient CAD. The primary short-term levels for traders to watch are the overhead resistance at 1.375 and the underlying support at 1.371. A decisive break above 1.375 would be a bullish signal, potentially leading to a rapid ascent towards 1.379, the upper bound of the recent range mentioned in the news. I assign an 80% likelihood to this scenario if upcoming U.S. economic data, particularly employment or inflation figures, continues to exceed expectations, firmly pushing back against Fed rate cut narratives. Conversely, a clear and sustained break below 1.371 would be a bearish development, opening the path for a drop towards the 1.365 support, followed by the more significant 1.3616 level. I estimate a 70% likelihood for this bearish outcome if the Bank of Canada's July 30th announcement, or any subsequent commentary, is interpreted as more hawkish than expected, or if global risk-off sentiment boosts safe haven currencies like the CAD. For the broader, medium-term outlook, derived from our daily chart analysis, the key price channel remains between 1.36 and 1.44. A sustained move beyond these broader boundaries would signify a significant shift in trend, requiring strong fundamental drivers. The absolute most important upcoming event, as highlighted earlier, is the Bank of Canada's interest rate decision on July 30th. Any deviation from the anticipated hold stance or even subtle changes in their forward guidance will undoubtedly be the primary catalyst for USDCAD's next major directional move. Beyond fundamentals, always remember to combine your analysis with robust risk management, including proper position sizing and setting stop losses. Pay close attention to sudden surges in volume during breakouts, as volume confirms price action and can differentiate a genuine move from a mere shakeout. That wraps up today's comprehensive analysis of USDCAD from Explain the Charts. If you found this insightful, please hit the like button, subscribe to our channel, and activate the notification bell so you don't miss our next deep dive into the markets.